Hey, welcome to Tech Stocks and Beer, where we grab a cold one and talk about making some money. One question I get asked a lot about retirement accounts is what should I set up, a traditional IRA or a Roth IRA? And it's a sticking point for some, and some people are even like, yep, forget it, I don't know. I'm not going to set up any account, which is a horrible mistake. So today I'm going to teach you what the differences are between the two accounts and which ones you should put money into, when, where, depending on your circumstances. But first, I just want to say this isn't financial advice, more like guidance. I'm a CPA and a CFA charter holder, so I know what I'm talking about, but each individual situation is a little different, and I don't want to get into each of these little nuances because the video would go on for hours and nobody wants that. And yes, I am drinking a beer because that's in the name of the channel. If that bothers you, there's plenty of other people who pretend like they're not drinking while they're filming these things, and you can listen to them. Uh, but what I'm going to talk to you like you're my friend at the bar, and I'm going to give you the real advice, the real truth. I'm going to do it in simple terms, and I'm going to avoid the financial jargon and some of the douchery that happens at these other financial channels. So just simple talking to the point. It comes with drinking a beer. I hope you grab one too. And if you need to pause the video to do that, go ahead, pause the video, grab a beer, like it. Maybe leave a comment or two at the bottom. I'd really appreciate that. Here comes a disclaimer and a little beer talk. If you don't like that, I got the chapters listed out below, so you can skip to the chapter and just get on with the show if you don't care about me or my beer. So we'll see you there. So today I'm drinking a Bro Science from the Little Beaver Brewery. I stopped at that brewery. It's in Illinois. I stopped there on my way back when I was driving from Florida to Wisconsin. I just went home for the summer, and it was a highly rated brewery just off the highway. Gotta stop. Picked it up, and it's a pretty good beer. It's a triple IPA, New England Hazy, and it's the spot. Yeah, it's nice and cold, and it's got a little sweetness to it. Sometimes these triple IPAs, I get a little super duper hoppy, but this is actually pretty smooth and pretty refreshing going down, and it's good because it's like 9-10% alcohol. It's a triple IPA, which always has more alcohol than the rest. But anyways, yeah, I would give this probably say a 7.5 out of 10, which is a pretty good ranking for the beers. It's hard to get above an 8. Now on to what's better, a traditional IRA or a Roth IRA. And to be honest, the end outcome is pretty much the same. There's only one variable that's going to cause a difference. But you can open up these accounts at the same brokerage, put the same investments, the same amount of time, the same amount of money, and do the same investment strategies. And the only thing that makes a difference is taxes. And specifically, how much you pay on taxes now and how much you're going to pay in taxes in the future. You see, in an IRA, you don't pay taxes now, but you pay the taxes once you make your distributions after you turn retirement age or 70 and a half when they force you to take them out. Whereas a Roth IRA is just the opposite. You pay the taxes now, but it grows tax-free for the rest of your life. And you take it out, you don't pay any taxes on it. You can take it out, at your own speed after you turn 59, 60. So here's the deal. If you pay more in taxes now than you're going to pay in the future, or so you think, because it's a guessing game, you're going to want to invest in an IRA. If you pay less taxes now than you pay in the future, you're going to want to put more money into your Roth IRA. Because if you pay the same tax rate now at the same time as you retire, you're going to have the same amount of money when it's all said and done in your hands to spend in retirement. So it doesn't matter. So you have to make a guess on taxes. Now, this isn't an easy question to answer. I don't know what's going to happen even next year. If President Trump loses to Biden, you might have higher taxes next year than you do this year, let alone 20, 30, 40 years out in the future. So like I said, this is just a guessing game. But if I had to guess, I would say I'd give a slight edge to taxes being higher in the future, because right now we're seeing this huge move to socialism and paying taxes to cover these government programs, help the poor, pay reparations. Universal basic incomes is becoming talked about, where you just give everyone $1,000 a month no matter whether they work or not. More welfare. All these things are coming down. They're getting more socialistic, and it's becoming more accepted to have these socialism-esque policies. And if that happens, taxes will most likely go up. So with higher taxes in the future, that does give an edge to investing a little more into a Roth IRA right now. And it's especially true if you're in a low tax bracket right now. If you're only making, say, $40,000, you're not paying that high of a tax rate. I think you're around 15% on each dollar earned at that amount. It's not like you're at the top bracket of 500,000. Well, you can't do it anyways. Not like you're at 100,000, you put it into a Roth IRA where you're being taxed at like 28% of the dollar. And so there's a chance in the future it's gonna be higher than what you're at now. Because if you're just paying 10%, it's almost definitely gonna be higher if you can save a decent amount of money. So it's really a personal decision whether you want to invest in the traditional or the Roth IRA, depending on where you think you are and the tax you pay now. I mean, if you make over $130,000 yourself, I think that's the income limit where you can't invest in a Roth IRA. Then you have to put in an IRA. You don't have a choice. So at that point, just put in the IRA, take the tax write off now, yeah, and pay the taxes in the future when you go. But like almost all things in investing, this doesn't have to be an either or decision. You can put half your money in a Roth, half in a traditional. That's not necessarily a bad option because at that point when you retire, you'll have some money coming out tax-free and you'll have some money coming up taxable, but you might not have any earned income from a job or a salary at that point. So that investment income might be in that little standard deduction range you have where you're not paying any taxes. Right now it's $12,000 before you pay any taxes as an individual. So if you're taking out less than that, it'd be great to have money in IRA because you get the tax break now and you're not paying any taxes in the future. So that's perfect. So you can do that way. You can just put half and half, and it gives you a little bit of variability when you get a little older and just need to take the money out. You can kind of decide how much to take out of each account and where and when, what year, and structure it in a way that's tax advantage to yourself. So it's a very personal decision. So I hope this helped you make a decision on which one to set up. I know I didn't give you a clear-cut answer like you may have liked, but like I said, with taxes likely going up in the future, I would definitely put some in a Roth IRA now. But you can split it up and half and half, or put 75% in your Roth, whatever, it doesn't matter. But I hope that helped you decide what to do. Gave you some good advice here, and if so, hit the like button below, subscribe to my channel, and as always, leave a comment. The encouragement definitely gets me going, fires me up to do more of these videos, and it also helps other people find this on the channel. And the more money there is in the world, the better off everyone's going to be. So I want to try to make everyone money, everyone richer, and make the world a better place. That's the goal here, so we can all enjoy a delicious craft beer. Cheers, friend.